Hello, and yeah, you might be shaken a little bit when you see my almost bald hair, but I decided to have a new haircut, okay? But that is not important because today we have way more important topic to discuss. Today we are going to discuss assets and liabilities. And sadly, 99% of people still do not know the meaning of them, they don't know the difference between them. So, which is the very sole reason why 99% of people are bad investors, why they are still stuck at their 9 to 5 jobs that they absolutely hate, why they are still poor, and why they are still running the meaningless rat race. Okay, if you want to be like 99% of the people, then you can skip this video. But if you want to slingshot your and step up your financial game, basically having enough money at some point to quit your job and focus on your own business, then this video is perfect for you. Okay, because assets and liabilities, once you understand that, you will improve your financial game significantly. You will start to think about the money from a way different perspective. It's going to challenge your mindset a little bit, but that's only for the good one. Okay, so if you're wondering who I am, you know me already at this point. My name is Yasha, and I help young men about the finances and money. I teach them about those topics because I've noticed that universities don't teach that. They do teach that to some extent, but the problem with professors is that 99% of professors do not live the lifestyle that they are teaching. They might teach you about the finances and about the money and investments, but they are not investing themselves. So it's very hard to find people, or should I say professors, who you can actually trust. Okay, I personally know one professor. He is a father of my very good friend, and with him I can see that he knows what to talk about because I can see his lifestyle and he made it. So if he made it, then he knows what he's talking about. But the problem is 99% of professors do not know what they're talking about. Okay, that's why I'm here. So enough of that long chat. Let's go straight into the topic. Okay, so today we are going to discuss assets and liabilities. There are Every company has three main financial statements. Okay, every company has to write on a quarterly basis three important reports. The first one is income statement, the second one is balance sheet, and the third one is cash flow statement. Okay, assets and liabilities are part of the so-called balance sheet, which is the second report. Balance sheet actually tells you where the money is at a certain point. Okay, it shows you the money that the company is getting and the money that the company is spending. And assets and liabilities are the major part of balance sheet because we can see how much money the company is getting and how much it's spending. It's that simple. Okay, and as you can see here on the slide, yeah, balance sheet is divided into assets and liabilities. And when you are investing, you need to understand both of them. You need to understand the difference because that way you are going to make better, more informative, and most importantly, the correct financial decisions. Okay, so let's go. Here we have an, wait, let me zoom a little bit here. So here we have an a balance sheet of Apple. Okay, you can see here on the top. Oops, sorry, I covered it. Wait, sorry. This is a little bit unprofessional, but yeah. So Apple Incorporated, okay? And you can see that the balance sheet is divided into assets and liabilities, okay? So basically, here you can see that how much money they are getting. So this is how much money they are getting, and then this is how much money they are spending. Okay, I know that this looks super complicated, so we are actually going to write our own balance sheet, and then we are going to analyze our own finances because that's going to help us understand better where our money is going and what behavior should we change. So let's go. I'm gonna write here a very simple balance sheet. I'm gonna do it like that, and then here we have assets and then here we have liabilities. Okay, so basically what you have to know about the money is you just have to think about your whole spending and your whole income, and then think whether something is bringing you money into your pocket or taking it out of your pocket. Okay, this is the main difference between assets and liabilities, and this is the simplest explanation possible. Assets give you money, liabilities take your money. Okay, so now let's think about it. For example, you have a job, okay? You have a 9 to 5 job that you absolutely hate. So 9 to 5 job brings you money, okay? So we can count that here into the assets, okay? So this is going to be your salary. Your salary is, let's say, 1,600 euros per month. So this is your asset, okay? Because it brings you the money. Then let's say that you are investing in the stock market already, so you are also getting some dividend income, okay? And that dividend income is going to be, let's say, actually no, the dividend income that I am receiving right now is around 250 euros. So that's additional 250 euros in my pocket, okay? Then let's say that you do some online business or whatever, and you get, let's say, 10 euros per month, okay? You were teaching some young children about English classes or about German classes and so on, so you earned 10 euros because their father paid you, okay? So that's going to be your another asset, okay? So classes, okay? 10 euros. And then that's the whole money that you are getting into your pocket. Now let's think about the money that we are spending out of our own pocket, okay? What costs do we have? So you are living with your partner, let's say, so you have to pay a rent, okay? Because you don't live with your parents. So the rent for you is going to be, let's say, 500 euros, okay? And then you have to also pay electricity for that flat that you are living in, so that's going to be 100 euros, let's say. And then you have, let's say, you have a gym ticket, okay? I mean, gym subscription, that's going to be 25 euros. And then you have to buy the food, which is going to be another, let's say, 300 euros. And that's basically it, okay? So, and then here you also have then plus additional costs, let's say, I don't know, dates, and so you go on a date, you go on a trip, you go to, I don't know, strip club or whatever, so here is nice strip club, whatever, okay? Those are basically your finances, okay? So assets are the money that you get into your pocket, and the liabilities are the money that you spend, that goes out of your pocket, okay? And then we can basically calculate this real quick. Let me take the calculator. So we have 1,600 plus 200 plus 10. Okay, so our income per month is 1,860 euros, okay? And our liabilities are 500 plus 100 plus 25 plus 300. So our costs are around 925. Yes. And then our profit is the difference between 1,860 minus 925. So we are per month 935 euros in profit that we can then again reinvest here into our own asset column. Okay, we can reinvest that into, how much was it? 935. We can reinvest that into our own here, the assets, so that at the end of the day this brings us way more money. Okay, so this is very simple structure, this is very simple explanation of assets and liabilities. And if you understand this right now, if you understand this, what we have on our screen right now, then you are already better than 99% yeah, I would say 90% of the people, because now you can more easily discuss, or let's say see, what brings you the money and what doesn't bring you the money. Okay, many people do not know the difference. Many people think that rent is their own asset, you know, that the rent brings them money, even though it doesn't. Now if you live somewhere that is not your flat, then that's already a no-go. Okay, you are already losing money, you know. So basically that's it, man. That's the simplest explanation possible. Assets bring you the money, liabilities take your money away. So every time you are going to purchase something, think about it. Okay, is this on the long term going to bring me the money, or is this on the long term going to lose me money? For example, when you are going to click on the first link in the description, you are going to think, okay, will Yasha's course bring me the money on the long term or not? Obviously it will, so go for it. Okay, so now you are asking yourself also perhaps, okay, now I know the difference between assets and liabilities. How can I make money? That's a good question, bro. How can you make money? It's very simple answer. Focus on the assets. Why? Because I already told you, man, assets bring you money into your own pocket. And stock market is the easiest way of obtaining assets, because as we discussed like in previous videos, you know, everyone can start investing. I started investing around 2.5 years ago, so if I managed, then you can as well. It's that simple, you know. Yeah, you just buy stocks and you get the money, but do not buy any stock like just blindly. Focus on dividend stocks. Why? Because dividend stocks, especially Main Street Capital, Realty Income Corporation, Vici Properties, and Artisan Partners Asset Management, are the best stocks that I've invested so far, because they are so-called dividend stocks, okay, which means that they bring me dividends on monthly basis, and I'm basically cash flowing every single month. That's why I was able to obtain in around 1 year like already 250 euros with my dividend stocks. Okay, dividend stocks were not the only reason why I got that great return per month, but also so-called secret strategies that I'm teaching as well in the link in the description. Okay, so if you're interested, if you want to step up your investing game, go and click on the first link. Okay, now here I want to ask you additional question. Okay, you asked me how to make money, so now I'm gonna ask you, do you have a job? Yes or no? So if you have a job, okay, you have a job that you absolutely hate and you want to get rid of it, so then I recommend you that you invest 30% of your income immediately when you get the salary. You invest it into your assets. Okay, basically you invest 30% of your salary into the stock market. Okay, for example, if you are earning 1,600 euros, okay, per month, that's going to be around 30% is going to be around 500 euros. Okay, so you invest 500 euros immediately into the stock market, so that you start to build this asset column. Okay, you start to build assets which you will on the long term bring you more and more and more and more and more money, because they are going to snowball. Okay, then if you don't have a job at the moment, then I recommend you that you focus on your own business, just like I'm doing right now. Okay, I don't have a job, so I'm using my free time to make more money with my own business, and then basically focus, invest that money from my business into the stock market. Not into the stock market, but into secret strategies that, as you know, are in the first link. Okay, so that's it, man. If you have a job, then start focusing on the assets, start buying stocks. If you don't have a job, still work on your business, but focus on the assets as well. And I guarantee you, you will eventually accumulate so much money that you will be able to do basically whatever you want. Okay, but wait, there's more, So if you want to double your monthly cash flow, if you want to reduce your risk when investing, if you want to be independent from stock market crashes like tariffs that we are having right now, for example, and if you want to use other people's money to make your own money, then click the first link and I'm gonna teach you pretty sick shit that is going to accelerate your investing game, okay? So do the hard work, bro, and see you on top of the world.